Welcome back to the channel. So this is another market outlook trading video in which I want to show you the key buyers for the trading week and the key levels that you need to focus on. Now before I go into that, the first thing that I want to do is I want to do a quick recap about this week's trading results as well as the entire month of June. Now this week has been a very difficult week, and that's why we actually decided not to really trade. So we didn't really take many trades, and in fact some people wasn't too happy. Okay, some of them were very nasty, and even my teammates had to address this issue. Nonetheless, okay, we still came out with a profitable week and a profitable month of 581 pips. Okay, it's not say a very fantastic week, but still is a profitable month for us, and we are grateful that we are able to make money. So I hope you actually made money this whole entire month of June. You may not have made money last week, or rather this week that we just traded, because we didn't really send many trades. But remember that trading is a long-term game. Okay, we are not here to make a quick buck. We are here to make money in the long run. Okay, we're talking about 3 years down the road, 5 years down the road. Now with that being said, okay, I want to move into the analysis, which is the main bulk of today's video. Now if you are new to the channel and you haven't yet joined us on Telegram, please join us. Okay, the link is in the description down below, because we send out a lot of signals there for free. Okay, so you can just join us there in the description down below. The next thing, okay, if you are a new Telegram subscriber and you have not yet joined us and hit the subscribe button, please do that, right? Please do me a small favor and hit the thumbs up button as well. And please go grab this free day trading guide, okay? Because shortly, as I break down the market for you, what I'll be doing is I'll be looking at the market condition, price level, and entry triggers. So if you have not yet downloaded this guide, then you are not going to understand what this analysis is all about. Okay, so it will not make sense, so please go grab it. Okay, head over to the link in the description. It'll take you to this website right here. Just click on this, input your email address, and you should receive an email that looks something like this. Okay, I just want to take some time to address this problem that I see a lot of people facing. Okay, if you input your email and you do not get this, please let us know. Okay, this is totally free. Okay, it's quite frustrating for some of our teammates to complain that you guys are saying that you didn't receive it, and you get annoyed and you send angry emails to us. Okay, please just send us a simple email to say you didn't receive it, which by the way you should actually receive, because we just tested it. Okay, we tested it 9 minutes ago and we received it, and you can just click here. Okay, it's totally free. There's no reason why you need to send any angry emails if you didn't receive it. Now with that being said, next week we have the FOMC, as you can see right here, and we have the ECB speech. Okay, so these are kind of the weeks that we don't really like, because as we always mention, FOMC is when we don't know what's going to be released. Okay, we do not know what is going to be said during a meeting or during a conference event. So for this reason, next week is probably going to be a very difficult week to trade. Okay, don't expect the market to be very clear. Don't expect it to trend nicely, right? If you really want the highest probability setups, it would probably be after Thursday or even after Friday. Okay, so it's quite late into the week, and chances are we won't really send out many signals. Okay, but you have to understand that these are the kind of weeks that a lot of people lose money because they don't understand this, right? They want to trade all day, every day, including Sundays. So please do not do that. Please be patient. Again, we will send out signals in our Telegram if we see anything, right? We only send out signals which we ourselves are taking. So if we don't see anything, we will not force a trade, and we will not give in to people who say they want trades, okay? Because that's not what we do. Now with that being said, let's move on into the charts, right? The first pair that I always like to look at is the dollar index. Now dollar index, not much changes. Okay, last week I talked about this. I said that the market condition is bullish because you have a high, low, higher high, higher low, higher high, higher low. Okay, so market condition is still bullish. Now, I did warn about this level right here, which is close to the recent swing high, and true enough, price just barely close above, and then it starts selling down again. Now, right now, price is very close to resistance. Okay, trend is bullish, market condition is bullish, but you want to buy low. Okay, so what I'm saying is that probably price could just retest back to this level. Okay, the swing low right here. It probably even overshot a little to stop out people who actually place their stop losses below this swing low. Okay, and then it probably will retrace higher. Now just take note that if this happens, then what might happen is that we would see a head and shoulder pattern, because it would kind of like resemble a head and shoulder pattern in the sense that there's a left shoulder here, head, and then there's a right shoulder right here. Okay, so just be very careful. Okay, right now don't chase the market because we are very high and the resistance is right here. Okay, so as you can see, I'm still following the MPE trading framework, which is a market condition, price level, and entry. Okay, so market condition is bullish, price level I've given you, this is the resistance, this is a support. The last thing that we need is an entry trigger, which is waiting somewhere here. Okay, could be a hammer pattern, could be an engulfing pattern, could be a morning star. Okay, it really depends. Again, if you do not know what I'm talking about, all of this has been documented in the free day trading guide. Okay, it's very in-depth. We have the candlestick pattern cheat sheet, we have the 4 stages of the market, so everything is actually included here. But what I'm trying to do in this video is to show you how to do it in real time. Okay, rather like, you know, real theory rather than just theory. Okay, real life examples of this. So moving on, let's look at euro dollar. Now euro dollar is in a bearish market condition because we have a low, we have a high, lower low, lower high, lower low. Now one thing to note is that on Friday, price failed to close below this low here. Okay, so at this moment, even though the market condition is bearish, okay, I do see that there is a potential for a reversal setup. So what do I mean by reversal setup? It means that perhaps this bearish trend is going to become bullish. Okay, but for that to happen, there are some specific things that we need to see. Okay, in this case, it would be ideal if we can get an inverted head and shoulder. So what's an inverted head and shoulder? It's where you have the left shoulder here, the right shoulder here, and price goes up, comes back down, and finds support right here at the right shoulder. So please do not rush in to buy next week, because remember, we are still in a downtrend until we see a reversal pattern. Then it's probably still a counter trend play. Okay, and if you are new to trading and you're still struggling, then you should not be doing counter trend plays. Okay, in fact, I've already said here in the 3-day trading guide, if the market is in a downtrend, you should be looking to sell only. So this is really like a reversal trade, right? But only if we see that the market retraces higher, comes down and finds some form of support right here, then can we go ahead to buy. If not, I recommend that you skip this pair because it's still looking a bit not clear at this moment. It's not that straightforward. So later on, I will show you some currency pairs which are clearer, and those are the currency pairs that I recommend that you focus on. Okay, so let's move on to pound dollar. Now, by the way, if this is helpful for you, please let me know in the comments down below, right? Also appreciate if you could take 2 seconds of your time to hit the subscribe button and the like button, right? It will really help this channel to grow, and we put in work on the weekend to prepare this video for you. So really appreciate if you could just do that for us. Now, this is pound dollar. Pound dollar is similar to euro dollar, okay, but it's a bit clearer, okay, because pound dollar, you can see that there is a form of a head and shoulders pattern being formed. This is the left shoulder, this is the head, and this is the right shoulder. Now, market condition is bearish because you have a low, you have a high, lower low, lower high, lower low. So market condition is bearish. Now we want to be looking to sell. Now the issue is that price seems to have just been supported, or rather make a fake break of this low right here. So at this moment, I would be more patient to wait for price to retrace higher. Okay, in fact, I would prefer if price retrace higher, okay, something like this, before looking for an entry. Okay, the reason for this is because that this is a swing high here, and there are a lot of stop losses right here. Okay, those people who shorted here, what they have done is that they probably put their stop loss right above this swing high. Okay, this is a very normal trading setup that most rookie traders take. Okay, nothing wrong with it. Sometimes we do it as well, but it's important to note that there are a lot of stop losses above here. So what happens is that when there are a lot of stop losses right here, the market has a tendency to just overshort it, do some form of wash, okay, meaning that they do a fake out right here to trigger these stop losses and then start selling down. So for this reason, I would prefer for price to retrace higher, look for a candlestick somewhere here, and then you can short it down. Okay, this will still keep the head and shoulder pattern, which is left shoulder, head, and right shoulder over here. So this one is tricky. The only thing that I can be very sure right now is that you have to wait, right? Because price is at support right now. If you want to do counter trend trades and buy up, remember that this is lower probability and you need more experience. So this is not something that I recommend. Okay, if you're still struggling, just be patient. Okay, I know you don't like to wait. I do not like to wait either. But please, okay, if you really want highest probability setups, then you need to wait. Okay, this is just the way it is. Moving on to pound franc. Okay, pound franc, it's in an uptrend. Okay, previously I talked about this double bottom. This is the first bottom, this is the second bottom. The neckline was broken, so the market condition is bullish, which means that we want to be buying. Now the next question becomes, where do we buy, right? Because after the market condition, we need to look at the price level. We don't just want to buy because the market is bullish. We want to buy at the right price level. So right now price has did a fake out. You can see that this is a fake out of the recent high right here. So price closed above, did a doji and started selling down. Okay, in fact this is what I call an evening star pattern. Okay, if you do a Google search, this is an evening star pattern. So right now price is probably going to retrace down a bit, probably going to test this, and after that it might find support here. Okay, again, I do not know whether price will be supported here or not, but this is a strong level. If you just scroll back a bit and switch to the line chart, you can see that this level here was previously support, resistance, resistance somewhere here, and resistance here as well. So this is a strong level. I do expect the price to at least find some form of support here. Whether it really bounces up or not, I do not know, but I will be looking for a trade setup here. Now, one last thing for this currency pair that you need to know is that if price were to retrace down here, then we could potentially be seeing a head and shoulders pattern with a left shoulder here, head, and the right shoulder over here. So for this reason, if you are going to be looking for a buying opportunity somewhere here, just be careful and take some profits here, because this will definitely act as resistance. Okay, so you have to be very careful and exit early, right? Just make sure that your risk to reward makes sense. Okay, if you do not get a good risk to reward, for example, if let's say by the time the candle closes it somewhere here and your stop loss has to be like that, then please do not chase this trade. Okay, because the risk to reward just doesn't make sense. Now, if you need a general rule of thumb about what is a good risk to reward, then I recommend taking a risk to reward of 1:1.5, meaning that for every dollar that you risk, you're going to make $1.50. Okay, or if you risk 100 pips, then you are going to make 150 pips. Okay, so that's my recommendation for you. Now, moving on to Aussie dollar. Aussie dollar, this one right here, market condition is still bearish because you have a high, low, lower high. Sorry, this is a lower low, then this is a lower high, lower low, lower high, lower low. So it's a bearish market condition. Now, on Friday, we had a fake out of this level. Okay, because on Friday last week, we had the NFP, which we didn't actually want to trade, because during NFP weeks like this, the market tends to do a lot of fake outs. So this is a perfect example of what I mean, okay, and why we chose to stay on the sidelines and not trade. So you can see if you chase the breakout right here on Thursday or Friday, then you would have been whipped out, unless your stop loss is somewhere above here, or you put your stop loss very, very wide, which is not something that we do. Typically, we like to have a stop loss of 20-30 pips, right? Because we want to have a tight stop loss so that we can have a good risk to reward ratio. Now, anyway, market condition is still bearish. Same thing as the I think dollar franc. No, sorry, same thing as the pound dollar. Okay, Aussie dollar, I'm expecting that price will retrace a bit higher, okay, above this swing high, because remember this entire zone right here that I've mapped out, 0.7578 to 0.7652, this is an entire zone of resistance. Okay, support and resistance are never a single line. Okay, it's always a zone. And what happens is that a lot of people, they think that, okay, this is just resistance, if this is broken, I trade a breakout. And what happens is that they're actually buying into a zone of resistance. Now, for the same reason that I explained in pound dollar, I do expect price to go above a bit, because all the stop losses are here, and I do expect the market to whip out all the short sellers who shorted here and place their stop loss here. So for this reason, be patient, right? Wait for price to go up, and then if you want to look for a short, you can look for a short to sell it down. But do be careful also, because if, let's say, price comes up here and starts retracing down, there is a potential inverted head and shoulder, which is the left shoulder here, the head here, and the right shoulder right over here. So price might find support here. So if you were to short somewhere here, be sure to take some profit when price comes back down here. Okay. Now moving on to Kiwi dollar. Kiwi dollar is the same thing. In fact, Kiwi dollar, Aussie dollar, pound dollar, okay, these are dollar crosses, and that's why they're actually showing the same thing. Now, last week I talked about price selling down, okay, from this level. So this was Friday, Thursday, Wednesday, Tuesday, Monday. I said that, okay, we are very close to resistance. True enough, price started selling down. And I also talk about this support right here. Price indeed found support at this level. Okay, this level is not difficult to find, right? If you just switch over to the line chart, it should be pretty clear that this is a strong level, okay? Because this was the previous swing low, and of course you have the swing low right here as well. Now, price is at support, however, our market condition is bearish. That means that we need to be selling still, okay? So we still want to focus on selling and not buying. So same thing as the Aussie dollar or the pound dollar setup. I do expect the market to retrace a bit higher. Okay, same thing. This is the swing high right here. Retrace higher into the zone of resistance to stop out all the stop losses that are above this swing high. And then after that, it starts going back down. Okay, but just be careful again, because when it starts selling down, then we probably have something like an ascending trend line here, and price might just find support right here. So if you are selling somewhere here, be sure to take some profit, when price starts dropping down. Okay, other than that, if this level is broken, then of course we probably will see the recent swing high right over here. Now let's move on to dollar CAD. Dollar CAD is a bit tricky. Okay, it's a bit more tricky, so just listen closely. Now dollar CAD, the market condition is bullish because you have the double bottom pattern here. So you have the first bottom, second bottom, and it's broken. Okay, and you have a nice up thrust right here. You have very big extended range candles that move quite a distance. Now the issue that I have with this pair right now, or rather if you want to buy, is that this looks like a double top. Okay, this is the first top, this is the second top. However, this double top is not yet confirmed, so it's a bit more tricky. And in fact, even if this double top is confirmed, this entire up move has the swing low right here, and this swing low has not been violated, right? If you use this swing low, swing low, swing high, swing low, swing high, then market condition wise is still bullish, right? Of course, this is the intermediate trend in which you have a high, lower high, and if this one comes down, then you get a lower low. But nonetheless, this movement up is still up. So it's a bit confusing, right? Do not trade this if you are new, okay? But I just want to highlight that I do expect that price will probably come back down to revisit this level here, which is actually the neckline of the double bottom pattern. I don't expect this level to hold anymore. Okay, I believe last week I did talk about this level, that this level is not that strong, because you can see right here that if you were to scroll back and look here, you can see that this level wasn't very significant. Okay, there are not a lot of fighting going on right here, just a few candles and then start plunging. So I don't expect this level to hold. I expect price to go down lower, okay, and find support here, and hopefully look for a trade setup here and just buy it up. Now, this is not a very clear setup, as I mentioned. Depending on how you see it, it could be bullish or it could be bearish. So I don't recommend that you trade this, right? If you are new, please try to avoid this. Now, this is the currency pair that I recommend that you focus on if you are new, because it's the clearest already. This is dollar yen, and dollar yen is in a very clear uptrend, okay, because you have a high low, higher high, higher low, higher low, higher high. So there is nothing bearish about this currency pair, and you shouldn't be selling at all, okay? You really shouldn't be selling. Whether you are expert, whether you are profitable, whether you're not profitable, if you are trading the daily time frame at least, you shouldn't be selling. If you are trading the H4, H1, M15, you want to sell, it's fine. But on the daily chart, at least, you shouldn't be selling because the trend is up. Now, I do expect price to retrace lower, okay, because you can see that this is an engulfing pattern that engulfs this, and what happened over here is same like the other currency pairs. There's a fake out of the highs, okay. You look at this right here. or rather this one. This is a fake out of the lows. Okay, this is a fake out of the lows, and this is a fake out of the lows. For this right here, it's a fake out of the highs. Okay, so most of the currency pairs are showing the same pattern. Now, I do expect price to retrace lower to this level right here, which is actually this swing high. Okay, and there is confluence with this ascending trend line. More importantly, this is the previous swing low, so similar concept. This is the swing low. There are a lot of traders who put their stop losses behind this swing low. Okay, they put it just below here. So what the market likes to do is the market likes to hit this stop losses, and then after that start rallying up. So just be very careful if you traded this and you bought somewhere here. Please be sure to at least shift your stop loss to break even, so that when the market comes down, it doesn't stop you out at a loss. Okay, very important, because I do see that there's a lot of stop losses being placed below this level. So price is very likely to just sell down to trigger your stop losses first before going back up. Now moving on to gold. Gold, nothing too much to update, because last week I did say that price is at support. So in fact, I didn't really adjust the charts, because I said that after this big movement down, we probably see a very nasty consolidation towards this level. Until now, price is still consolidating. So I do expect price to be very choppy, up, down, up, down, up, down, up, down, until it comes here. And then I'll look for an entry trigger right here. Chances are we won't get a trade next week, or in probably next week as well, right? Because after this movement down, I do expect price to consolidate. So for this, just be patient, nothing too much to talk about this. Now euro pound is still consolidating as well. It's pretty annoying. Okay, I thought that this trade would have broken out. In fact, I think we took some trades on euro pound long this week, and we expected it to go all the way up, but it didn't. But anyway, price is still consolidating. You can see that this trend line is still intact. Market condition is still bearish, because you have a low, high, lower low, lower high, lower low. Okay, and this trend line is still valid. Now, this support is still valid as well. So price is really trading between these two tight zone, the tight support here and this resistance here. So it's very difficult to trade. I don't advise you to trade this, okay, but I just want to bring out the levels, which is this 0.8543 and this trend line, descending trend line right here. Okay, if this level is broken, then of course we have the recent swing low right here. Okay, NZDUSD is in a clear uptrend. Okay, no matter how you see it on the daily time frame, it's an uptrend. You have high, low, higher high, higher low, higher high, higher low, higher high. Now this seems like a very strong trend. Okay, I do not have a very strong level. If you want a very strong level, it's actually somewhere around here. This is a very strong level to look for buys, but in all honesty, I don't expect price to retrace all the way down here. So if you really want to trade and you want to take note of, or rather you want to capture this trend, then I would think that the immediate support level to look for an entry would be this level here, because price was resisted here for about 3 days, 1 day, 2 day, 3 day, and I think that this would be a good level. Anyway, in an uptrend like this that is so strong, ideally you want to look for very shallow retracements. You don't want to look for retracements like this, because if price really retrace like this, then you have to ask yourself if the market condition is really very bullish. Okay, so this is not the strongest level, but if you really want to take advantage of this trend, then this is a level to go to look for a long, right? And what might happen is that price might just do something like this. Okay, and probably you'll probably get in with a very tight stop loss. Okay, so it is probably still a good trade, right? It's probably a good risk to reward trade, because you can get in with a small stop loss, and if you are right, you can just ride a very big trend up. So this is still a good trade in my opinion, and if there's a trade setup like this, I would like to take it, because the trend is very clear up and you want to ride the trend with a small stop loss. Now let's end off this video with pound yen. Pound yen long term wise is still uptrend, because you have the high low, higher high, higher low, higher high. Okay, I did talk about this ascending trend line for some time. Okay, this ascending trend line was supported here, right? Indeed, we found support here, and price is still in the middle of nowhere. Okay, price is in what I call the no man's zone, right? Support is here, resistance is here. right, if you try to trade right now, you are actually trading in the middle of nowhere. So I advise you to be patient, okay? Wait for price to either, retrace here, or if you really want to trade the breakout, then wait for price to break out and then retest this, okay? Again, market condition is bullish. I don't recommend that you sell here, because remember what I always say, right? If the market is in an uptrend, then you should be looking to buy only, okay? We don't want to be selling just because price is at resistance. This is the easiest way to make money, okay? That is following the trend. Market conditions bullish, just look for support, buy somewhere off here. If you are right, you make money. If you are wrong, just cut your loss, okay? It's that simple, okay? So that's all I have for you. That's all I have prepared for you today. Sorry about that. Right, so I hope you got a ton of value, right? Make sure you join us on Telegram, okay? Again, I'll leave a link in the description down below. We will send out more signals next week if we see any, okay? Please be patient, right? We know it's very frustrating because you want to make money. We want to make money as well, right? But please be patient. Do not force a trade. If there's no trade, then there's no trade, okay? Make sure you get your day trading guide, okay? If you have not gotten it, again, if you do not receive it in your email, please check your spam. Sometimes it goes to your spam and you don't check it, and then you complain that you didn't receive it. Please go check it. If you really didn't receive it, please email us at support@financialmarketwizards.com and we will forward you a copy, right? No issues with us forwarding a copy, but please do not, ill-treat our support team, right? Our other, administrative staff, and tell them, get nasty and tell them that, like you guys are scam, or like you guys charge for your stuff and you do not actually say that you do not actually give what you say that you will give, okay? So that's not very nice, right? Really appreciate if you be nice to our admin staff, because we work very hard to serve you and to give you value. So if not, thanks for watching. I'll see you in the Telegram channel.